We detected unusual trades on Cameco stock, ticker symbol CCJ, on the last trading day when the stock made a new 52-week high. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Cameco stock, the largest publicly traded company in uranium, which produces nuclear energy. Are the rich bullish on Cameco stock or bearish, so that we can trade in the same direction to make money while the rich are getting richer on Wall Street? As you can see, we are trading at a very strong resistance level. In fact, earlier this year, we were trading Cameco stock and we took profits at this level. This was the video that we had published and shared with everyone on our channel, where we made 300% profit when we took profits on this day, because we got into the trade on this day, on December 20, when we published this video. Okay, so we use this type of strategy and analysis to find the best stocks to trade at the right time, so that we can also make money while the rich are getting richer on Wall Street. We'll put a link to this video at the top if you missed it. Make sure to subscribe, hit the bell icon, so you don't miss out on these very profitable opportunities. Now, they all don't work out all the time. They're not 100% winners. Some will be losers, but that's why we diversify our trades with these trades by the wealthy investors. And by doing that, we can make more than what we lose. What's important is we can make trades like 300% when we get them right. All right. And that's why diversifying the portfolio with the trades of wealthy investors are very, very important to make this strategy work. And not only trade one or two, but maximizing the trades to reduce your risk by diversifying your portfolio. If you want access to our trades of what the wealthy investors are investing in, make sure to go to our website, where we share their trades and also option strategies as well to reduce your risk, to increase your profits. Now, what is happening to Cameco now? That is the question. And we will answer that now with the new data that has come up at the options time and sales tape, as usual. April 12, we can see these trades for the April 1945 strike puts. These are very cheap, $5, very out the money. Okay, so very, very low chance of happening. So because they're low chance and they're also very low cost, not very significant to us. Okay, $5, 7,000 contracts does not amount to very much. We do not want to follow small fish trades. We want to follow the big whales. And what is a big whale? It's a whale putting a trade like this in. 5,000 contracts for the January 2025 65 strike calls, paying $425 for each of these contracts. And not just that, you can see more of these trades at the 65 strike calls for January 2025. More contracts. And more over here as well. Okay, so this is a big, large trade. We follow these. These are wealthy investors. And another one over here. 5,000 for the September 20. 45 strike calls, 70 strike calls. Same trader, because this was done all at the same time at 10:44, 43-second mark. Okay, so we'll take a look at these two sets of data to find out, are they trading Cameco bullish or bearish, and then show you how we are trading CCJ. Okay, so let's get to the first one, the January 2025 65 strike calls. You can see here, this expires next year. But even though it does expire next year, this does not necessarily mean we have to wait this long. Okay, the fact that they put on these positions right now is significant because they could have waited later to put these on, but they wanted to lock into these strike prices at this time to get the best price that they think they could make the most out of. Okay, we are in the same position. All right, to us, this is a low chance of profit trade in comparison to the trades that we share on our website, because you can see here the open interest is 16,000. So some of these trades happening could be closing trades. Even though there's 21,000, it is greater, but because this 16,000 is greater than all of the lots that were being traded, they could be closing. All right, so because of that, it decreases the probability of this trade under the trades that we share with our membership on our website. If you want the higher probability of profit trades with higher chance of profit, go to our website. We'll put a link at the top here. We simply follow this trade using position sizing to manage our risk. Okay, so these 65 strike calls, we simply bought them to open. You can see they're paying $4.25, and you can see that currently they are already at a slight loss. Okay, because they're going for $3.95 now. Okay, when they paid $4.25, but we were able to get them for cheaper because we got in towards the end of the day when Cameco was trading lower. Okay, they got in when Cameco was trading at $50, and currently it's at $49.59 towards the end of the day. Okay, and we can also see that the next trade for the September 20s, okay, these trades expire 160 days from now, but they do not have to wait until then for these trades to be profitable. At the 45 strike calls, we can see the 5,000 contracts greater than the open interest, and the 70 strike calls that they traded 5,000 greater than the open interest. So we know both of these strikes are opening trades where they are buying the 45 strike calls and selling the 70 strike call. And so when we take a deeper look at this trade on the profit loss diagram, we can see clearly that these are bullish trades with a positive delta. If it was a short bearish, this would be a negative delta. Okay, so when we take a look at this diagram, the x-axis here represents the share price of CCJ. The y-axis here represents the profit. 0 is right here. So when these lines, the purple and the blue line, is below this 0, it is a loss. And that happens when the share price goes down. It becomes profitable if the share price goes up. And the purple line represents the current time, current date, while the blue line represents the expirations of these options. So you can see that the purple line becomes immediately profitable if CCJ starts to go up immediately. So that is why we do not have to wait for these options to expire for them to be profitable. Okay, if we waited longer, CCJ would actually have to move up more for it to start to become profitable. You can see the blue line crosses the 0 break-even point at a greater share price, whereas the purple line crosses right here where it currently is. That's when it crosses this 0 break-even point. Okay, so that is something to note about how to use this diagram and why these options do not necessarily have to wait until expiration to be profitable. And that is why trading them right now at this moment in time, these wealthy investors are suggesting that CCJ could go up higher and break this resistance. And that is why they are positioning this trade now at its new high. Okay, now keep in mind there is earnings coming up, so this is a uncertain binary event that adds to the risk of this trade. Okay, so if you want to learn more about our option strategies, make sure to go to our website. We'll put a link up here. And if you haven't watched this video, when we initially got into the CCJ to make 300%, we'll put a link over here, and also the video over here where we made the 300% over here, because you can learn a lot from hindsight on how we used our strategies in our analysis to make this much money by simply following the trades of wealthy investors. So make sure to watch those videos to learn more. As usual, please smash the like button, subscribe if you haven't, and have a great weekend. Take care.